The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 13th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. Hope everybody out there had an incredible, extraordinary weekend. Thanks so much for joining us. Let's make this a great week, and let's begin our day with some empowering beliefs. You know, folks, like a farmer, please allow me to plant what I think are some seeds of wisdom, at least some seeds of wisdom for you to think about. Number one, I've got 9 seeds of wisdom this morning. Number one, people are unreasonable, illogical, and self-centered. Hey, love them anyway. If you do good, people will accuse you of being selfish many times, having ulterior motives. You know what? Do good anyway. If you're unsuccessful, you'll win false friends and true enemies. Guess what? Succeed anyway. Honesty and frankness, well, guess what? They make you vulnerable. Be honest and frank anyway. The good you do today, guess what happens? That's right. It'll be forgotten tomorrow. You're only as good as your last deed. Right? Well, do good anyway. The biggest people with the biggest idea, they can be shot down by the smallest people with the smallest minds. You know what? Think big anyway. People favor underdogs, but always follow top dogs. Fight for some underdogs anyway. Number 8, what you spend years of building, guess what? It can be destroyed in a heartbeat, overnight. And guess what, folks? Build anyway. And number 9, give the world your best you've got, and you'll get kicked in the teeth. No question about it. Give the world your best you've got anyway. You know, my goal is always to give you the best that I've got. And trust me, I've been kicked in the teeth a few times. In fact, I lost my front teeth when I snatched a slap shot out of thin air. Not something I suggest you do, but guess what? I did it anyway. Let's go check out these markets. Let's go see what they're doing anyway. Right now, you've got the Dow futures. They're up 7 points. Dow futures, the Dow index is up 7 points. It's trading at 16,445. The S&P is flat out here. It's trading at 1842.64. NASDAQ is up 2 points. It's trading at 41.76. Russell 2000 down $1.70 right now. It's trading at 11.62. New York Stock Exchange off 7 points, trading at 10,364. Gold is up 40 cents. It's trading at 12.47. Silver down 11 pennies, trading at 20.10. Light sweet crude off 50 cents right now, trading out at 92.20. You've got natural gas up 17 cents. It's trading at $4.22. Our call number is 877-927-6648. Let's go check out the indexes, see where they are headed to. Let's start off with the S&P 500. What do we got going on inside of the S&P 500? Let's get rid of that potential C point. If we take a look at what we have, what has occurred thus far, after making the high on December 31st, the high in the S&P 1849.44, we saw retracement into the lows here on January 16th. January 16th, how about that? It's only the 13th, January 6th. Now, if we take a look at what type of retracement that's been so far, pretty measly retracement, not even a 0.382 retracement. 0.382 would have taken it 18.18, and guess what? Didn't get down there. Only been down to a low of 18.23. Now the question is, are we seeing the B to a C of an A to B equals CD form out here? And that is still a possibility, because what we had, if we take a look at retracements on the way up, the 0.786 area is 1843.94. So far, the intraday high out here, 1842.74. The high on Friday, 1843.15. So the potential of the C point of the A to B equals CD, it is still in place. What is going on as we speak here right now is the key is that December 31st low. That is the swing point. That low is 1842.41. You are trading just slightly into it as we speak here. The actual close on Friday was 1842.37. 1842.37, that was just below the December 31st swing point. A close inside that, says 1849.44 would be the likely target, the likely destination for the S&P 500. That's what's going on there. Let's go take a look at the Dow. The Dow, if we take a look at retracements as well, just a minor retracement. This is the easy retracement. This is the one that just simply comes off of the last leg, not your A to B equals CD, the way up, but where you'd really use as your anchor point the A point. In this case here, we're using the C point of an A to B equals CD up, and that is a swing point low December 12th. If you go from that low to December 31st, the .382 retracement, 16,250, nowhere near that low so far. What we have seen is a low of 16,525, so several hundred points away from that. However, you know, what the Dow is not doing, the Dow is acting a bit weak out here. It's not doing much of a retracement. And today, not providing you really with any information other than the mere fact that we've got an inside day going on inside of the Dow out here. Now, what it has not done, unlike the S&P 500, it has not been able to close inside of the December 31st swing point. So the key number here inside of the Dow is going to be 16,446.68. If, in fact, it can close inside that, and we're only 5 points away from that level. If it can close inside there, that then says, okay, if you're going to close inside a swing point, light volume or not, doesn't really matter. It can go up and test the high. And again, the high there in the Dow, 16,588. So no information here as we speak here on the Dow. And, of course, you really have to check back in at the end of the trading session to know whether or not it closed inside the swing point. Let's take a look at the NDX 100. The NDX 100 had been weak. Now, the NDX 100, if we take a look at its swing point low, let's get rid of some of the lines out here and just start from scratch. We'd be coming down to the low here from December 18th. And if we go from that low, that swing point low to the high that came in on December 31st, you'll see that it did do a .382 retracement. And that's why it was the weakest index out there. However, on that session when it made the low here on January 6th, boy, it made a nice little bull separating line candle. And that was on January 7th. That is a very strong, it's the strongest two-day reversal pattern that you can have inside any Japanese candlestick. And so that's what it did. Then a gap up. I would give the gap up an even stronger meaning than a bull separating line out there. That's why gaps are your friends. You know, don't worry about the mere fact that at some point in time maybe they'll be filled or not. When something gaps up, boy, it's telling you that there is some strength, especially if you got some volume behind the move. Now, what is the NDX here doing? It has not closed inside the swing point from December 31st. And if we take a look at, now, so we know it did a little bit more than a .382 retracement, but if we take a look at the retracement from the December 31st high to the low that came in on the January 6th out here, what you'll see is the .786 level, was hit and it was rejected. It did that on January 9th out here. That number is 35.7498. It also tested the low of the swing point from December 31st. It did that on later volume. So that was a reversal. Nonetheless, we need to be paying attention to, and the magic number is 35.7498. I believe that's the number. No. 35.7525. My apologies. What I'm really paying attention to is the swing point low from December 31st, because a close inside 35.7525 sets up a run to the highs out there. So I can't tell you whether it's an A to B equals CD down or whether it's going to make a run for the highs out there, and that is inside the NDX. It is not the weakest index it was, but in my opinion, it is no longer the weakest index out there. And the real reason being is because it's actually got the most bullish patterns if you take a look at an intraday chart out here. If you take a look at an intraday chart, when the market was making its lows on Friday, guess what it was doing inside of what was once termed the weak index out there? It was making two strong patterns. It was making two buy patterns out here. The strongest pattern was the 3 drive to a bottom pattern. Let me just blow this up on my screen because it was a beauty out here. Remember I say when a market is moving lower, you're going to learn a lot from the weak, and you're going to learn a lot from the strong out there. You want to really be able to put them together. In this case here, the weak link out here was certainly the NASDAQ, and as the NASDAQ, well, it's really, I guess you could kind of say it was, in this case here on Friday, it was best to be taking a look at all four index futures accounts, in my opinion, and certainly the Dow, because it was pushing its consolidation lows, and then the NASDAQ. Now, what the NASDAQ did, if you take a look at what you like to see in any kind of a three-drive pattern, number one, you like to see symmetry in time. And if I've got a little tool out here. It comes with the Ensign software. It's a little cycles tool, and it allows you just simply to easily measure time. So I'm going to go from 1600 hours, 4 o'clock in the evening, January 8th out there. The low of that session, it doesn't really matter what the low is, but I'll tell you what the low is anyways, 35.49.50. So we're going to go from that swing point to the next low, and that next low came in right here at about 2:30 in the afternoon, down around 35.42 or so. And you can see that it really made a perfect, it was within a bar, so it was certainly perfect with regard to symmetry in time as it was making that third drive. And then what did it do? Made a nice 1.272 expansion of a swing point. And it was really all coming in at the 0.786 level. The 0.786 that I'm measuring here is coming from the swing point low at about 12 noon on January 6th, all the way up to the high that was put in here at about 5:30 in the morning on January 9th. The actual 0.786 number, 35.23, it did not get all the way down there. It got down to 35.29 out there, but that is close enough in my book. Really, you could say it made the 0.618 retracement, because the 618 retracement is 35.34, 75-ish, and we never really saw a close below that level. So it did that. It gave you a nice three-drive to a bottom pattern. We want to be paying attention to that, most certainly, because that is those patterns, three-drive patterns, they're the strongest. They are the strongest reversal-type patterns. And so we want to be paying attention to it for two reasons. One, is this, in fact, a super strong pattern, and that means that it's going to turn into, the A to B equals CD. In this case here, an A to B equals CD up, or if that real strong pattern gets broken to the downside, it tells you about the weakness that is inside the market, potential weakness out here. And right now we don't have an answer. We certainly don't have the A to B equals CD on the way up. In order for that to take place, you would need price to get above the B point, which is going to be your 5:30 a.m. session on January 9th, and that number is 35.77. That's the number you want to be paying attention to. You see price get above that level, and then what you would have is an A to B equals CD up inside of the NASDAQ futures, and certainly inside the NDX 100, you will see not just a test of the high, but you'll probably see that level get broken out there. 3,600 would be the number for the NQ on the 30-minute time frame out here. And right now, we do not have the information, in my opinion, to tell us which way this is going to break. What we do have are the patterns that we can absolutely learn from. Now, not only was it just making a three-drive to a bottom pattern, it was also making a Gartley buy pattern. That's kind of the yellowish looking figure on my screen out there. So it's making two bullish patterns out there, and that was in the NQ, and that's why we are going to be paying close attention to that for the signal. The only problem is, the weak element of this whole thing is that it did not give us a bullish reversal signal as those patterns were being formed out there. And that always makes it just a little bit suspect out there in the marketplace. Right now, flat market, let's go do some barefoot water skiing, because that's what you can do so easily on a flat surface. And right now we've got a flat surface. The Dow is down 2. The S&P is off 83 cents. The NASDAQ's down a point. Russell 2000 down 2. NASDAQ making up for it. It's up 2. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. What's the difference in a word? I mean, just one word out there. Well, you know the difference. There's a huge difference in a word. And as we check in on the volatility index, many people like to use the word fear out there. And so people will say, in this case here, if we take a look at the volatility index, right now it's trading at 1187. It's going to go after the hammer candle low from the trading session of December 26th, and that was at 1169. And people will use the term complacency, or they use that there's no fear in the market when they take a look at the VIX. How about if you replace that word with just simply liquidity? How about if we just took a look at the VIX index and we said liquidity, folks, that when the VIX is trading below the 50-day exponential moving average, it says there's some good liquidity in the marketplace. Does that change your outlook on what the VIX means, or maybe how you could apply that tool and use that in your trading? I say that it can, and that's why the difference of a single word out there is important to us. And right now what we're seeing is plenty of liquidity in the marketplace. When there's plenty of liquidity, a market's going to do one of two things. Either going to go up, or it's going to move sideways. And that's what happens when the VIX index is below that liquidity line. Okay, that's that 50-day exponential moving average. If we go take a look, though, and see, remember I said market's going to do one of two things. And we can see here that the VIX got below that 50-day exponential moving average back on January 3rd. So now if we go switch over, let's take a look at the ETF structures here. Let's go take a look at the ETFs. Let's start off with the Dow. If we take a look at the Dow, I said January 3rd is when the VIX came back below the 50-day exponential moving average. And what we've seen here on January 2nd, we've seen nothing more than just a high-level consolidation move sideways out here. The low so far, really, if you take a look at the diamonds, if we blow this up on our screen out here, this is where where gap is your friend out here. This little gap here from December 26th. Let's just draw a line across the screen. This time we'll make it a black line out here. And the volume on December 26th, of course, we know that's a light trading session out here, right? That had about 5 million shares. And so far we've seen that level get tested. It was tested on January 9th with 8 million shares. So 8 million going against a holiday session of 5 million. I don't know how you really do the math out there, but I know it ain't no 5 million on December 26th. Yeah, I do believe January 9th is a real number out there with 8 million shares to the downside. But nonetheless, does it really matter? It couldn't bust through it. That becomes a support level. In fact, it was tested again on January 10th on Friday. After that poor jobs numbers, that had 7.4 million shares. So less volume than the prior session. Has been able to bust it out. Now, if we add another tool to our screen out here, if we use that relative strength index out here, what we can also learn here is as the high was being made back on December 31st, it was what? It was in the extreme overbought condition. And so it's got to work its way off, and that's what's really taking place right now with the consolidation move sideways out here. It's really not a bearish pattern that we are seeing. And from a bearish pattern standpoint, you've got some areas of support. Support level 1 is what has been tested here. Support level 2, quite frankly, ends up being the high of December 24th, and that is at 163.26, and that is inside the Dow Diamond. So right now, nothing more than a sideways move. The liquidity index, that VIX index, which says we've got a lot of liquidity. Market just simply moving sideways. Can either move sideways to move up out there. So I prefer that. That's just Steve-O-isms. I prefer that than calling it the fear index out there. Tell me what you can learn from fear. Just simply to take it head on. It's the only thing you can really learn from fear. You don't want to avoid it. You want to be able to consume it. You want to be able to bring it in out there. Fear, you never make any good decisions, from a level of fear out there. If we take a look at the Qs out here, what are the Qs doing? Now, the Qs did back off, just like we took a look at the NDX 100. This probably puts it into more perspective because you can easily see the volumes out here inside of the marketplace. And that's the volume bar from December 18th. That was off of the bottom. That's our C point of an A to B equals CD up. The top of which is 86, 22, 68 million shares. So the index, the ETF, that was showing the weakest link out here, the weakest hands, that was on January 6th as the pullback came in there with only 32 million shares. No way was that enough to bust it down. Yeah, maybe a little bit accelerating volume from the prior couple sessions, but what it was going into, not a chance. And then a little bull separating line that took place on the very next trading session out here on January 7th. Now, nothing to write home about. It's not as if it's going to bust things out to the upside here just yet. We were really paying attention to the patterns inside the NQ on the 30-minute chart out there. What we have seen also is the December 31st high, which has got 24 million shares. Of course, that's going to be a light trading session. And as price got up there, it was rejected with 23 million shares on January 9th. So not enough conviction to bust it to the upside either. That says we've got a bit of a consolidation pattern going on inside the Qs as well. And, of course, if we take a look at its relative strength index, it, too, was coming from what? It was coming from an overbought territory. And the most bullish thing any market can do, quite frankly, is to move sideways when you are overbought, to just work off that digestion out there. 877-927-6648. Dow is up 15 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 11 points right now. So, before we went to the last break, we were really talking about consolidating markets, the most difficult of markets to make money at. The way you make money in consolidations is to pick them out as quickly as you can and then identify the lows and the highs, and that's really how you have to be able to play it. You got to be willing to change your position. On the consolidation low, you got to be taking a look at a long trade out there, and on the consolidation now, you want to be taking a look at the short trade, and when the price breaks, you want to be able to flip those positions and move in the direction of the trend. Now, the nice thing about the consolidations are that they are measured moves out there. And by measured moves, that means that your price projection is going to be equal to or greater than that consolidating pattern out here. If we take a look at the IWM here, the IWM, right now it's trading inside of the swing point. It's swing point high, which in this case here is December 26th, not December 31st. The IWM made its swing point high. The IWM has a mind of its own. It usually does things early. In this case, it most certainly did. 115.97 is the swing point high. On December 26th, had 19.6 million shares. Obviously, it's got to be adjusted somehow to the upside. And as price moved in there on January 10th, on Friday, did it with 29 million shares. So you had 29 million going into what needs to be adjusted as 19 million. I don't know if it was similar volume, if it was coming in there with volume, but does it really matter? Not really. Why does it not really matter? Because when you close inside a swing point with light volume or volume out there, you're usually going to go test the highs, and that's what we're taking a look at here. Take place right now inside of the Russell 2000, inside of the IWM, because price continues to trade inside that swing point. A rejection would be a close below 115.10, and then the second rejection would be a test of the 115.97. Certainly do it on less than 19 million shares, but again, that number's got to be adjusted, and that's where it makes it difficult around the holiday trading period. But a close above 115.97 and a close back below would be a rejection of a swing point. And right now, the IWM, not giving us, in my opinion, not giving us a clue, because I don't know how to adjust that number for December 26th. Maybe you do, but I most certainly don't know. I mean, I don't know, how do you figure out what the trading volume really should be on that trading session? That's the problem that we're dealing with here. Now, what we also are not dealing with, though, is if you get a close above that level, and at least it seems to be doing it with accelerating volume, that would be telling you, okay, now you've got a breakout, and that's what's going on right now with the Russell 2000, the IWM. If we take a look at the SPYs, the same kind of pattern, really, as the IWM. From this standpoint, December 31st was its swing point high. That had 86 million shares. And on Friday, we saw it close inside there with 102 million shares. It's probably pretty close to similar volume on December the 31st out there. Right now, you're trading up into that level. That says, hey, if you're going to trade up in that level, you know what, might go test the 184.69 area. You're trading at 144.12 as we speak here right now, and that is on the SPY. So that covers the ETFs for the indexes out here. Let's go check on some of these stocks. Let's check on a couple of core stocks here. Let's go see what stocks like IBM, Apple are doing out here. IBM looks like it has moved just a tad lower this morning. IBM has formed that 0.786 Gartley sell pattern. There's been no confirmation of it. Give me a moment here to get rid of these Fibonacci levels, which were off to the side. No confirmation of that. And, of course, you might say, well, Steve, why do you say that? I say that because it completed that pattern here with a wide-ranging bar. If we're going to measure from 0 to 10 as far as strength as bars go, that would have to be a 9. That would, with 10 being the strongest. That would have to be a 9. And when you complete a pattern with a very strong bar, oftentimes that's not really the end of the pattern here. Now, it had beautiful Fibonacci expansion and contraction numbers, no doubt about that. And this is IBM we're talking about. The retracement is the coming off of September 19th's high, down to the low that was put in, that high volume low that in essence has been tested on lighter volume. That was a low on October 17th at 22 million shares, price point 172.57. From the high to the low, you're going to find the 0.786 somewhere around the 190.33 level. That was the high on that trading session with that type 9 bar, strong bar out there on January the 7th. Now, price continues to trade with inside that bar. So that means there's really no bearish reversal signal at all. In fact, if you were to see it close above 190.35 and certainly do that within the next 2 trading sessions, that actually would be called the rising 3. That's a continuation pattern. Now, because price has stopped here at the 0.786, what I would say is, and it had a 1.272 expansion of your B to C swing point, so that is a beauty. But if this pattern here fails, I would say chances are, high probability, you might ask what percentage, and I could just pull a percentage out of my thin air. You thought I was going to say something different. I caught you out of thin air. I would have to say that they would move to about the 200, and it's a high percentage, folks. Hopefully I made somebody smile out there. I would say the price would move to the 200.96 to probably, quite frankly, $208. So if, in fact, IBM can break this pattern here and break to the upside and do with a continuation pattern, I would say the 208 area is most likely where it would travel to. Why? Because that becomes a consolidation high. And at this stage here, even though it broke through the consolidation low, which was a 30-point to the downside, it's broken back inside that level. You break the 0.786 Gartley pattern out here. It says it turns into a butterfly, and the 1.618 butterfly will take you all the way back to the consolidation high. So we want to be paying attention to IBM for sure for a signal as to what is going to happen inside of the Dow, quite frankly, because it's the number one weighting structure. Inside of ExxonMobil, it's completed its 100% measured move of its consolidation pattern. It did that here, well, quite a while ago, back on December 27th out there when it got to the 101.74. Right now, just simply consolidating sideways. Nothing significantly bearish about this pattern here, and that is an ExxonMobil. If we go take a look at Apple, Apple today trying to contend with the 50-day exponential moving average. It closed below that. That is bearish. I would say another test today, which it's tested it, which, by the way, the price level, I know somebody out there was saying, hey, what's the 50-day exponential moving average? It's 539.40. It's traded at 538.71. If it rejects that area and closes below, that's not a good bullish sign. It says that price should pull back to at least the 0.382 retracement, which also happens to be the 200-day exponential moving average, and that is inside of Apple out there. 503.98 looks at the moment to be its next price target. Let's see what else we have out here that is worthwhile to look at. Google. Let's take a look at Google, stocks like Google and Priceline. Let's go see what they are doing out here. Google taking on its swing point high from only 3 trading sessions ago, which had volume of 2.2 million shares. That high was 1147. It's done today, 690,000 shares in an hour of trading. It's got good volume. It's got more volume today at this moment, it looks like, than on the trading session of January 8th. That is nice for the NDX 100 out here, and that is on Google. Let's go check out Priceline, which recently this is really traveling in a little bit of a consolidation zone. Looks like I need to move that consolidation low a bit lower out here. So Priceline, a big, strong stock, is not exactly giving up. Volume-wise, we're not seeing anything significant. Last time we saw significant volume inside Priceline, it was to the upside out here. And that took place on January 8th. That is in PCLN. Let's take a look at some stocks here that are popping and dropping. Let's look at some stocks to the upside out here. Which one? Oh, Medbox. Let's go see what this one's up 19%. I think that's probably in my. I think that was at one time in my stocks to the downside. I think they are a vending machine company, MDBX Medical Supplies. Somebody out there was talking about it selling medical marijuana out of a vending machine. I'm gullible. I'm not that gullible. In any event, here today, this thing had a nice move to the upside. So it's got high volume highs out here that are not tested. January 7th as well as January 8th out there. Big volume to the upside. This thing has pulled back. Ideally, it would pull back all the way to where it broke out, which would be down around the $11.99 to $15 area. Right now it's trading at $41 out here. So it's got a little bit of a piercing candle as we speak here today. Volume so far about 205,000 shares. Friday moved down with 480. So it's got some pretty decent volume behind its move out here. Let's take a look at Lockheed Martin. LMT is the ticker symbol. That's up this morning. Lockheed Martin is up about 3%. LMT, let's go see what it is doing, what it looks like. Oh, gapped up here this morning at new highs. Is that possible? Let me just update my chart here, make sure I've got all the correct data, because it's always possible that I don't. This could be one of those times. No, it does look like I do. Lockheed Martin, let's pull this thing all the way back. So Lockheed Martin, what is the news on Lockheed? Did they release some numbers out here? No numbers that I see inside Lockheed Martin, but this thing is gapped up. Done it with good volume, already 1.1 million shares. Let's pull this back on a longer-term chart. Let's take a look at a weekly chart here. So well above its highs out here. Now, I guess what you've got to be careful of with inside Lockheed Martin on the weekly chart We do not see any gaps present. I don't see anything to the naked eye out here that shows any kind of a gap, and we most certainly have that here today. So you'd hate to see this thing somehow form some type of island reversal top. Hasn't, but something to be paying attention to, and that is in Lockheed Martin out there. LMT is the ticker symbol. We take a look at stocks here to the downside. Let's go see what's losing a little bit of energy. Oh, I'm in the downside. Why did I put that there? Let's go take a look at stocks. You got Intuitive Surgical. That's off about $18 or 4%. SodaStream, we looked at that, and we looked at Lululemon. That's off 16% this morning. Let's look at Cree, the light bulb company. Looks like the bulbs have burned out a bit here this morning. CREE down about 8% off $5. This thing here is gapping down. Let me see if there's some news behind this move this morning. CREE. See what I find. Nothing more than a downgrade alert is the only thing that I see at the moment. Volume so far on that downgrade alert, it's got 1.6 million shares. It's got a swing point. Looks like probably that it'll target down here, the swing point low around November 20th, right around the $52.80 mark out here. Cree here has had some selling. This is the third time. The third time may be the charm. If Cree is able to bust through this swing point out here from November 20th at 52.85, it'll trade down to an original breakout area. And inside Cree, you have to be careful because that breakout area actually takes you down into the level of about $33 all the way back to January a year ago, January 22nd, 2013. So Cree has shown a lot of institutional selling as of late. The very first time was the volume off of the highs out here, and that was big volume. August 14th, 22 million shares to the downside. The next time we saw institutional selling inside of Cree, that was on the trading session of the October 23rd out there. That had 15 million shares, and today you're down with 1.6 million shares. So not the same kind of volume today to the downside, but nonetheless continued institutional selling inside of Cree, CREE out here. We've got PGEM is the ticker symbol. Stock I'm sure that we have never looked at. PGEM is, and it's PlyGem Holdings, and that is down with volume. Let's go see what let's go see what PlyGem Holdings actually does out here. Let me click on this. They're off 17% here this morning. And while that loads, PlyGem Holdings, they are a manufacturer and sell residential and commercial building products in the United States and Canada. Looks like they sell siding, fencing, stone, windows, and doors out here. Let's take this thing back. Ooh. So this is an IPO. This looks nasty, doesn't it? Here's an IPO, folks. Talk about moving out at the top of its range. That was on May 23rd. Price high was $24.46. Now, during that trading session, a lot of shares trading as often does, or as almost always does on the initial IPO day. 15 million shares, but there's some folks that actually own that stock at the $24.46 level, most likely. And right now, today, it's trading down at $14, and it is it's not below the most recent swing point low of October 2nd, but there was no volume down there. That had 401,000 shares, and today you've done 570,000 shares. So this does not look good for this company right here, and that is PGEM. Let's see what else. Biogen, BIIB. That stock has been on fire. Let's go see if there's any volume behind its move here today. That is off about 1%, down $3.70. Nope, doesn't look too bad there. Biogen, BIIB, had a nice big day on the trading session, big gap up. That gap was on November 22nd, 4.7 million shares out there. That was a nice move. And right now today, no bearish candle or anything like that. On Friday, up with 1.8 million shares, trying to take on 1.1 million shares. So Biogen taking on a swing point with volume here. So even though it's trading down a bit today, nothing bearish. Volume so far, let's take a look at volume. And it's actually pushing highs with volume, not pushing lows with volume, as it's made an intra-session high of 302.95 and 624,000 shares today. Right now, looks like we can take off our water skis and just do some barefoot water skiing again, because the S&P is flat. It's up 41 cents, and the Dow is up $3. Our call number is 877-927-6648. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's try to summarize what is it that we are looking at today. If we start off by taking a look at the New York Stock Exchange, bulls still have control. The summation index, it is pointed upwards. What you would need is a total today in order for the bears to actually take control of the market. The number you'd be looking for is 1615 or more. 1,615 net declining issues. That would go ahead and shift control of the market to the bears out there. Right now we're looking at a minus 120. So quite a ways away from that. The NASDAQ here, which was the strongest on Friday, is right now the weakest index out here. Now, we're not talking by a large stretch here. It is actually off 7 points, so it's not that big of a deal. But we do want to be paying attention to the New York Stock Exchange in looking for signals. What else are we looking at? Well, certainly we're looking at the euro, Japanese yen. When we started off the 9 o'clock show, we were pointing out that it was moving lower. It's a directional correlation with the U.S. stock markets out here. What we also pointed out was on the 120-minute chart, it had reached the extreme oversold condition. Right now, it is doing nothing more than working itself off out here. Those levels, utilizing that 14-period relative strength index, when they get into those extreme areas, they can stay there for a little while, but it's like a rubber band that gets stretched. Eventually, it has to work itself off, and it's going to work itself off either by consolidating sideways, as we took a look at the indexes and the ETFs out there, or it's going to go ahead and make a big reversal move out here. Thus far, inside of the euro, Japanese yen on the 120-minute chart, it's not giving us any kind of a bullish candle. Green, but green does not mean bullish. Green just means that it's trading above where its open was. When we take a look at a body of a candle, nor does red mean bearish. Red just tells you that that it's trading below the open of that session of the bar that you are using out here. But what I can tell you is that is not a bullish reversal signal inside of the euro, Japanese yen. That's on the 120-minute chart. Of course, we know that it's the daily chart that has priority. And as we take a look at the daily chart for that currency pair out here, it says that it wants to likely trade down to about the 136.75 level. What it has now done, or appears to be doing. The trading session for the day is not over, but on the daily chart, it does appear to be making an A to B equals CD down, and your 1-to-1 takes you to 138.97. I do not suspect that that is the landing spot. It looks more like it's about the 136.38-ish level, where it will form its next Gartley buy pattern out there. If we take a look at what that Gartley buy pattern looks like here, that would be just like about that. And that's what I would be looking for inside of the euro, Japanese yen. Maybe that takes us down into Thursday's full moon, and going into Thursday's full moon, maybe that's where this pattern here completes, and then that's where the low for January might be put into this market out here. So we're going to be paying attention to the euro, Japanese yen. What else do we want to look at? Well, I would say I would be focused, because I'm focused on it, is the pattern inside of the NASDAQ future, the NQ out here. The NQ giving us really the NQ and the Dow futures. Those are the two charts we want to be paying attention to. We got that 3 drive to a bottom pattern as well as a Gartley buy pattern. That was at the lows that were being formed on Friday. Now we're going to see if it can take out the highs in the 35.77-ish type area. If we see that, this market will, in fact, move higher. And we also want to be paying attention to the Dow, because should the market move lower, and typically over the course since the beginning of the year, there's been some selling that takes place within an hour of the opening session, and we're basically right about there right now. So we want to watch, see if the Dow takes out its 160-point consolidation move. And if it does that, that's going to point a lower. That's going to point a price move down to about the 16,176 level. That's it, folks. Stay tuned. Basil Chapman is up next. It's Marvelous Monday. We got Larry Pesavento after Basil. We've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a marvelous Monday. Look forward to seeing you tomorrow morning. Thanks a lot.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.